did you? Anything you
Gold, a tax loss season or a bull era? Stewart suggests investors should be positioning themselves for the rocket ride of a lifetime. Here's why by Stuart Thompson. Raceland updates: the next Fed meet and rate hike is December 19, and just weeks after that, U.S. President Donald J. Golden Trumpster Trump may be set to unleash a new round of inflationary and growth-crushing tariffs. It's not easy, to put it mildly, for American business to create new factories to replace the products made by highly productive Chinese factories. So, for 2019, most top U.S. bank economists and money managers are slashing their U.S. GDP growth forecasts and raising their inflation forecasts. Morgan Stanley's global stock market weightings are legendary in the institutional world, and they just moved America to a horrifying underweight ranking for their global stock market positioning. Most big-name economists in America see U.S. GDP growth sliding to sub-2% by mid-2019, while inflation stages an upside surprise. Goldman's top economists clearly have the same view I do. What's particularly interesting about this forecast is that their top economist is also forecasting 4 rate hikes from the Fed in 2019. 4 hikes would put enormous pressure on the U.S. government's ability to finance its outrageous debt. It can be argued that these hikes are the Fed's response to the insane growth of that debt. Whether there are 2 rate hikes as Morgan Stanley predicts, 3 as I predict, or 4 as Goldman predicts, the growth of U.S. government debt is clearly going to put vastly more pressure on the U.S. government bond market and the corporate bond market in 2019 than it already has in 2018. In the matter of tax loss season, I realize that many gold market investors are nervous that gold stocks will decline into December like they have in recent years. I don't see anything to be concerned about on this daily gold chart. I don't see anything on this GDX chart to be concerned about either. GDX and most senior gold stocks are tracking the gold price quite nicely. Gold supply is limited, and top analysts at Goldman and other firms are predicting commodities will soar. Also, 2019 is an election year in India. Morgan Stanley just raised India to overweight in its global stock market weightings, as it moved America to that somewhat pathetic underweight ranking. While GDP growth nosedives to potentially under 2% in America, it should be at least 7% in India for 2019, and I'm predicting it could hit 8%. GDP growth and upside action in the Indian stock market is good news for gold. The bottom line, gold demand in India is rock solid, as it is in China. As commodities begin to rise, Goldman will lead institutional investors into more commodities investing. Gold, GDX, GDXJ, SIL, and related stocks should have a great year. Whether it's MACD, moving averages, RSI, or a host of other technical indicators, gold and GDX look solid. Unfortunately, that's not the case with CDNX. That's a look at the key buy green and sell gold signals for the high-risk venture sector. The CDNX and related stocks are susceptible to tax loss selling. Any stocks are high risk but also high potential reward, and I don't expect to get a major buy signal for the CDNX index until gold trades at $1,420 on a weekly closing basis. Barrick is chaired by former Goldman president John Thornton. Thornton has aggressively bought stock in the open market and has categorically stated that he is not selling a single one of his shares for short-term gain. Clearly, Thornton is not playing for peanuts. With the majestic bull wedge and inverse head and shoulders bottom in play, it's obvious that this man is poised to see himself and all Barrick shareholders gain enormous wealth in what I call the old era. Thornton was the driving force of the Barrick-Randgold merger. That merger was approved by a stunning 95% of shareholders of both companies. The Chinese government has awarded him the government's highest award for a non-Chinese person. Of foreigners who have contributed significantly to Chinese growth, the Chinese government views John Thornton as one of the 15 most important people in the world. Barrick shareholders are not just in good hands. They are in spectacular hands. A breakout from the bull wedge with a Friday close over $14 is a rocket launch signal for the entire gold mining sector. Rather than wasting time worrying about a tax loss season that is going the way of the dodo bird, I suggest that gold stock investors should be positioning themselves, as Goldman clearly is, for the rocket ride of a lifetime, in a fabulous gold bull era.